Hey traders, BA here with your nightly TTB report. It is December 17th, 2018. Another wild ride today in the markets. Man, when you starting to get accustomed to 500-point swings in the Dow, that's a little crazy. This market has just been really, well, never seen anything like it. So it's just been very unbelievable to watch, to see how it reacts, just to see the magnitude of the moves. And well, I'll tell you, it just looks like it's never going to stop, but it will. Let's take a look at the S&Ps first. No recommendations for tomorrow, guys. We need to see this thing settle down. We got the Fed coming out Wednesday. You got a possible government shutdown Friday. Let me see what else. We've got Chinese meeting with their economic council, I believe, sometime this week. And then who knows what else is going to come across the wires. So the market, I will tell you, the market just can't handle much more of this. The pressure it's had just from the self-concocted, environment that's been placed on top of the market. Yeah, it's close to a breaking point. We still have, we could still go down another 100 points from here and still be okay with my theory, my thesis. But look where the S&P 500 futures stopped today, right at this support line that I drew a pretty good while ago. So we went down pretty low. I said this. I thought we would get down into this box. I thought that probe here in the move up was the move, but we just could never ever stick a rally in that section there. And then we come back down, get inside it. Hey, when you close back inside that, chances of getting to the other side, it's just one of the oldest, technical analysis. I won't say truism, but something that you can almost hang your hat on is when it bounces out, comes back in, closes inside it, touching the other side of your rectangle, that if it's a valid rectangle, it's better than 85% chance. Well, this one cut through it in one day, so not an issue. So we could go down a little bit lower. Let's take a look at the SPX, the cash S&P 500. I drew a couple of rectangles there, showed you where we could get down as far as, I'm doing this on my older computer. It's just having I guess its processor having a hard time doing all the calculations. We stopped right on top of those rectangles that I drew. This area is in play. I wish it wasn't, but it's there. It's in play all the way down to 24.21. Hey, we could get there tomorrow in a panic move. So the way this market is moving, it would not surprise me a bit. What is unusual is the kind of bookend big sell-off that we had Friday and Monday. That's doesn't happen that frequently in the market, especially the magnitude of moves we've gotten. But what I want to show you here is just take a look again at the divergences. We're holding pretty good right there. I'd like that, but hadn't worked yet. So we know we can go down a little bit more. Let's take a look at the VIX. My magic line above 30. We get up there and we stay up there. That's bear market territory. No matter what anybody says, the Russell right now is in bear market territory. It had a huge move today. putting it down into that 20% level. But I'm going to show you some stuff that hopefully will cheer you up. All right, so we know above 30 and we're in serious trouble in this market, especially if it gets up really high and stays up there for a while. We're not there yet, so let's take a look at let's go to the Russell. Man, why is the Russell not up there? Yeah, it's just a big move down in the Russell. That's a horrific move down right there. So we touched in past the 20% mark. The Russell just can't catch a bid. It just keeps making divergences. One day that will mean something. I don't know what day that is, but it will mean something. Positive divergence like that. Let's take a look at the bond market. You would think on a day like today, this is today's bar, you had a move up in the bond market. Again, I don't know what's going to happen to the bond market, when the Fed announces, but I'm short Treasury bonds via put spreads. We'll see. I've been wrong on the stock market, probably wrong on the bond market too in this session here. So we'll see how this plays out. But again, today wasn't a big panic move up. Nobody flocked to the bond market. Crude had a huge down day today, so crude is starting to shape up. And what I'm looking for, you see how flat it is here, how much of a good positive volume divergence we have going, and as far as the RSI indicator, positive divergence. So I'm going to start looking at that for a potential play to the long side. Now it's getting kind of interesting for the long play. All right, one of the things I want to show you is go back to my favorite data cruncher. These are all of the times that the S&P lost 1.5% on Friday and a Monday or greater, went into a one-year low between 1950 and 2018. So these are all the instances. And 1 year later, they were all, 90% of them were up. In fact, every time frame he measures here was above 80%. So, going forward, 1 week, 2 weeks, 1 month, 2 months, 3 months, they were all higher. So that is still possibility. We go higher into January. So we have that working for us. Got the stats again for us. Now here's another interesting 25% of the New York Stock Exchange and NASDAQ stocks hit a 52-week low today. Actually, it was more than that, I think. Yeah, I think it was slightly more than that. So what Jason did was take a look at every time that had happened. He noticed that the major losses were during the big global meltdown that occurred during 2007, 2008, something that's never happened before or after. So he excluded that data, and when he excluded the 2007, 2008 data, this is what he come up with. So, you're looking 2 months, 3 months, 6 months, and a year out. Very, very positive risk to reward ratios there. So this, again, the things that are happening right now in the market combined with the models I showed you last night, as bleak as things look right now, as lousy as the environment is, I've told you that I think that the yeah, we got something going on right now. Euro's popping pretty good, or very active. It's just the euro, and then it stopped. So, okay. So anyway, getting back to what I was talking about, the models I showed you yesterday, and the stuff that we're looking at today is still telling me that my theory's intact. As ugly as this is just one of the ugliest markets I've ever seen. So, but the guy who does the data crunching here, he added to his long positions today. Thought it was a good time based on the models that he was looking at. So I did want to show you that. Let's take a look at some stocks just to see what some of the stocks are doing. Netflix was looking really good at one time today and then did a complete turnaround, but you can see it's still holding up pretty good here. Facebook still trying to hold up. It's still looking good. I think if this market pops, Facebook's going to run really hard. Square's getting clobbered, but that one is but again, it's still holding above its highs. I mean, yeah, above this low it made back here in November. Let's look at Apple. Apple made a new low today. Got some good positive divergence. So again, we just need a lift in the market right here to get some of these things off the mat. Let's take a look at Amazon. Amazon's looking pretty good too. It's still above its lows, and I mean, it looks like it's got a perfect head and shoulder, inverted head and shoulders pattern right there. So who knows, maybe we'll get some good news from the Fed. Maybe the markets will, maybe the markets already have the bad news priced in from China. You never know when that's occurred. You know, maybe they've wrung all that out. Could be. We never know. We never know when the market's going to turn. We know when we get into an area like we're in right now that it's time to close your eyes, hold your nose, and just get in there and get to it. So I already have positions on. I may add to some tomorrow, but we'll wait and see. Guys, I'm still working on cryptocurrency stuff, so I'm learning and paying my dues. So as soon as I get that figured out, I will update you on cryptocurrency stuff. And in case you want to tag along, and what my plan is on cryptocurrencies is just to identify the altcoins and some of the main coins that, and maybe some tokens that just want to put money into every week. You know, just dollar cost average into these things, build a portfolio up, because I don't know if they're going to go higher. I think they are, just based off of all the things that I read about what's going on. But anyway, I'll keep you posted in that respect. Be careful out there tomorrow if you do any trading. And until tomorrow evening, this is BA signing off.